What's up, guys? I'm Joe Von Grichton, and welcome to Pippin and Dippin Academy's YouTube channel. I got my partner in crime, Hunter the Pip Hunter Burkett, here with me, and today we have something. It's a request. We always tell you guys, like, if you have a request, let us know. So we talk about it a lot. We talk about imbalances quite a bit in our other videos, and today we wanted to talk about it because we had the request to go into a little bit more detail. So Hunter's going to break down how we define imbalances, how we identify them, and how we use them to look for both setups and potential areas of take profit as well. Just very similar to like how we use order blocks and liquidity zones. Same concepts. We just use them all together. So before we do that, if this is your first time visiting here, beautiful. Hit the subscribe button. That way you get notified anytime we have a new video. We have been posting about 2 a week. Plus we do some shorts that have some little nuggets in them. You don't want to miss those. And with that, to check out the resources down below. Without further ado, I want to go ahead and hand it over to my main man, Hunter, and he's going to go ahead and bring you some sauce straight out of East Texas. We were having fun with that the other day, so I'll have a little more fun with that today. But Hunter, it is all yours, brother. Go for it.
Okay, guys. So yeah, just like Joe said, we had a request. We'll be talking about some imbalances. I'm going to keep it super simple, okay? Just like we did with liquidity. And liquidity imbalances to me are kind of the same thing in general because price is drawn to these areas, right? So I will share my screen, and here we go. Okay, so put you guys over here. Okay, so the first thing you should do, guys, when you're coming into your week is you need to be on the daily time frame. You need to see where big areas of value are, right? And what I mean by that is where is price going to draw to in the long run, where you're going to be setting up setups, to an area of value, because that right there is going to allow you to, once you know where the market's going, you're going to be able to go to the lower time frame and execute perfectly, right? So that's what you need to know first. And you guys know as well as we do, we talk about this all the time. We talk about liquidity and imbalances. So you can see here how we were moving really good bullishly, right? But look how the market, when it started bullish and started to, move inside here, and then we took back off, and in instance we went fully bullish, right? But what is it chasing? It's chasing what? Liquidity. You got what? Imbalances. Okay. A gap. You see what I'm saying? So there's areas of value. These are areas of value, right? This is a value for the market to potentially go back to, right? Now, on a specific note, right here, because we want to know what current price is doing, right? So we roll into our week. We're like, okay, what's relevant to me right now, right? So all this is in the past. Right now, is it still relevant? Yeah, because if you worked your way back down, you would want to know in this run down what's relevant, right? So right now, I'm still bullish and I'm still chasing that for something clearly in my path, right? So you can see that there is equal high. I go to the 4-hour time frame. These equal highs are just asking me, they're waving their hands, hit me. You know what I'm saying? So that was a really easy target, right? And then look, we're right above it. You got an imbalance right above it. Right. So I know in the back of my mind that price is drawn to that area. So now let's break down and use these same concepts to find our perfect trade setup. And it happens on the lower time frame. It doesn't just happen on the higher time frame. So what we'll do is we'll break down to the 15-minute. Okay. I want to look at this trade specifically because this was the trade that smoked into that. Okay. So I want you to pay attention to exactly. Don't worry about nothing here, nothing here. Pay attention to this here. Okay. Now, this red line is that area of value of the equal highs, and right above it was the balance, correct? All right. So when I'm inside my day, I look for those same things. I'm like, okay, I know my market's going to do one thing. It's going to manipulate for one. It does it every day, right? So what does it need to do? It needs to accumulate first. Okay. So the first thing I do is I figure out my buy side and my sell side, right? And you can clearly see that we got it right there. Okay. That's pretty relative. But look what's right below us. Okay. We have this little push down really acting as this whole little push down is acting as a block, right? But look what's right there above. right there above is an imbalance. And look how that we accumulated, okay? And see, that's the thing, that's the key to understanding the market is like when you have these areas that are just blatantly obvious, wait for the market to do it. Wait for the market to get into it. And then the confidence level that comes with you knowing that that price pulled into that and then pulled away and then set the trade for you is flawless. Okay. So you can see how we accumulated. And then what we do? Wham. We take out all sell side. Okay. And then we pull in immediately. So what I'm doing, I'm going to lower time frame and I'm fixing to stop you an entry. Okay. So you can see here, as we accumulated, we smoked down. What I love to see, is this a risky entry? Absolutely. But I love to see the price pull back and almost fill that whole candle on, immediately, right? I love to see that because I know for a fact that they just sent people to sell. Breakout traders, retest, go, right? And they just snapped, right? They're like, I'm going to send it that way, get them to go that way, and I'm not going to, right? But look inside the candle. Notice I'm going to zoom in really quick, okay? Look inside of the price action, okay? Now, same concept. What is price drawn to? This is an easy area of an entry part of it, right? So you can see here, this candle left in a balance after this candle left from here. So this is the open, right? And then we drop down. And two guys, this is still the same stuff we teach. If we're bullish, we want to accumulate, stop hunt low, catch the trade, rise, right? So this is pretty much like that little move down here. This is like I'd say like a type 2, type 1 W pattern, okay? So you can see here, once we do that, we pull back in, we left the imbalance, okay? That's an early entry. You can see we pulled in, and then what I do, I waited for the bullish candle. Same thing I teach. Close above the 13, boom. There's the entry, okay? Entry, flawless trade, okay? Flawless trade. We do what? Here's your much safer entry, okay? What did we do on that candle, or the second candle? We broke. We took out this liquidity, equal highs. We took out London high with this candle here. So we break structure, right? So then what? We pull back in immediately, okay? But it didn't feel. It doesn't need to come back to this. I know this is an area of value, right? Because we're going to be looking at that on this trade setup. But it doesn't need to, it needs to take the liquidity. It's drawn to that liquidity right now, right? It doesn't need to pull back into this yet, right? If it did, you lost. You would lose what I'm about to show you, okay? Now, you can see that we pulled back and still made a little bitty imbalance. You can see that that next candle pulled right into it. Okay, so if you had a limit right there, it would snipe you immediately in profit. If you missed the riskier part, okay? And you can see that it pulled back into that little bitty imbalance, okay? And I'm waiting for that. I'm not waiting for this pullback. I'm waiting for this, and then boom, because it's leaving a footprint, right? We talk about footprints, okay? So you can see that this act as a breaker, right? ICT concept, I want to give him a shout out for that. Okay, because a breaker is when you make a low and then you come up and then you make a lower low, right? And then it breaks structure. Okay, so this high right here act as a breaker. This is why this imbalance was relevant, was valid. Okay, and then we took off, right? So there was an entry there. Entry, still a flawless trade. You went and took out liquidity, what price is drawn to. It got, a lot into that imbalance. And now look at this pullback. You guys know when you start to hit areas of value like liquidity and balances, once it gets there, it's going to give a mean retracement, right? Why? Because you got people that are going to chase this price. People that chase that breakup structure right here and took off, right? Not knowing what they're doing, right? They'll break up structure, we'll retest, and we'll go. Why would you like? And there is an imbalance right here, but why would you want to buy right there? It's logical. Why would you want to buy after you took a major level of liquidity, right? And then you done pulled in your balance, knowing what's coming next, right? So then I know that we don't trade, you can, like I said, you can trade SPX and NAS in the evening time because it does give another setup in the evening time. But you can see here, look, smash down, pulls into what? An area of value, an imbalance. Bam, bam. Look how when it does it, what does it leave? What is price drawn to? So not only did it do that, it falls all the way down into that and gives you another setup, right? So you can see here on the 1 minute time frame, this was a 1 minute setup. Sorry about that. Hope I'm on the right area. Nope. Let me go back. There it is. Okay. Now, guys, I'm showing you an example. I like to see the second leg. Okay. I like to see a second leg be taken out right here, but this was a great setup. Okay. So we come down, we come up, we come back down. Okay. And then this second leg, okay, look what it gives. It gives this candle, closes above the 13, and gives the imbalance right there. So right there alone could have been another entry for you. Wow, because price is drawn to it. Price is drawn to the imbalance. So boom, we rise above, we pull back in, we give the close, and there's the entry. Pull back in again, and then boom. See, the thing of it is, guys, you could have been sitting behind this low, 70 pips for 140. There's a 2-to-1 right there. Especially at the end of the day, the problem is with you right now, you're greedy. You're being greedy. You want all of it. You want all of it. A 2-to-1, 3-to-1s, guys, in this market is a really good income. Okay, think about that. You have to understand. I promise you this. You've seen this all on social media of these people getting 50-to-1s, 36-to-1s. Guys, I promise you this. They have lost a lot of trades to get that. And it trumps most of their losses, right? But they're waiting. You go do a bunch of back tests on this. Trust me. Go back test how many times a 3-to-1 hits versus a 36-to-1. And I promise you, those 3-to-1s hit a lot better than those 36-to-1s, right? So I'm not saying it can't be done. You know what I'm saying? If you sniped the sniper entry up top and caught that whole move, then yeah, you're going to get a heck of a risk reward. But at the end of the day, this was super simple. I don't want you to look at liquidity and balances as like it's a huge technical. I gotta be, reading books that are 700 pages to understand this stuff. It's simple. It really is simple. If you're not making it simple, then you're overcomplicating it. Because imbalances, guys. Now, can you pick the wrong ones? Absolutely. But that's just comes. I can't teach you that. It comes with experience. Understanding these areas of value at a specific time. And that's another thing too, is guys, when you're inside, timing is everything as far. That should be number one on your list, is timing. Right? So understand timing, and you'll understand where these trade setups are, and understand where it's going to go on the higher time frame to take out or go to what price is drawn to, and that's liquidity imbalance. So don't make it harder than it is. And yeah, I think that's enough, guys. I don't have to go deep into this. You can see here, same thing. Boom, break of structure, right? Look what we pulled into. I can go to the lower time frame, and I'm pretty sure there's an imbalance inside of here. Okay, for this trade setup, and we took off. Right? It's all about, you got to do your due diligence and see where your market's going to go. Direction, timing, put all that stuff together, and then focus on this, right? And you'll find a perfect trade setup, and it will flawlessly go your favor. When you collect all dots, like you connect all the dots, you'll know it. Trust me, because you won't see no drawdown. Okay, so with that, Joe, did I miss anything?
No. I just want to clarify too, like, he drew up a lot of imbalances. So just to be clear, how we draw up imbalances and look for them is when you have like a big bullish or bearish candle, you're drawing the imbalance is the area between the wick of the previous candle or the body of the previous candle where it was at before it went bullish, and then the candle after the imbalance candle. So you draw it from like basically from the previous candle, then you have the imbalance candle, and then the candle after, you wherever that body or that wick of that next candle is, that's the imbalance area. And then he gave you a little nugget too to like add that in with break of structure, right? So break of structure and then understanding area liquidity. So we've been talking about imbalance a lot in all of our videos. So when we got this request, it was kind of funny because we talk about imbalance all the time. I just want to be very clear. The most simple form of the imbalance is the previous candle, whether it's the body of the candle or the wick, the imbalance candle, and then the candle after. We draw the area of imbalance in there. All right. And that's how, so you noticed when he went down to lower time frames, you can see it a little bit better. But I just want to be clear on that. But this is a fantastic trade, guys. When price is drawn back into that area, you saw it. It's flawless. Like he said, it's almost little to no drawdown. And you're going into profit. And the big thing is like he said, you don't need to get greedy, right? You need to take your 2-to-1s, 3-to-1s max and get out, right? If it ends up going 5R, 10R, 36R, like he's talking about, we know people that do that all the time, right? But they win 50% of the time. All right. They're losing 50% of the time because they're doing high risk trades to get such precise entries. Where with this, you can still get a precise entry and a little bit more secure, protect your equity. Because really, at the end of the day, guys, it's all about risk management. Hunter says this all the time. Trading is about 2 things: your mindset and your risk management. If you can do the strategies, there's tons of strategies that work. Whether you use something we're talking about or somebody else's, it doesn't really matter, guys. At the end of the day, it's how you control your emotions, all right, and how you manage your risk. If you can master those 2 things with something like imbalances here, you're going to be very, very successful at trading, right? But if you don't have the head game and you don't have the risk management in place, I'll be honest with you guys, you're going to be screwed. So, which leads me to, like, if you're there and you've been trading for a while and not being consistent, join our academy down below. Check it out. We also have a free Telegram as well. Go check that out. And of course, if you're new to our channel, go check out all of our videos. We have tons of great content in here. But definitely join our academy if you're ready to take your trading to the next level, whether you're a new trader or you've been trading for a while, you just haven't had that consistency. Join it. I can say this with extreme confidence. There are very few, if any, people out there that are offering the value that we offer in our academy for the price that we're offering it at. So with that, guys, Hunter, thank you, man. That was good stuff. I love it. He is definitely the mad scientist when it comes to chart markups, guys. Hit us up. You guys got more questions, more videos you like to see us create? Let us know. With that, guys, Hunter, I'm gonna let you take us home, brother.
Keep pipping and dipping, guys, and we'll catch you on the next one. Peace.